If you are holding US dollars right now, you are in a generationally unique situation, which will likely change in the next year or so, and you should be taking action right now to preserve your wealth. And what I mean by that is the US dollar is very, very strong compared to nearly every currency around the world. So I'm going to explain to you why it's strong. I'm also going to explain the US dollar index and why it's out of date. And I'm also going to tell you about some investments you should be considering right now before the US dollar weakens. So first of all, the US dollar is strong because globally, people recognize the US dollar as the best place to store wealth and do transactions with. Now, I'm not saying the US dollar is perfect. In fact, there's a lot of flaws with the US dollar, but it is the healthiest horse in the glue factory when you compare it to nearly every single currency around the world. Now, as the US outperforms the rest of the world economy, which will likely continue to happen for the near term, the US dollar will likely strengthen because international investors will continue to pile into the US dollar. But the Trump administration will likely want to weaken the dollar into the next year, 2026. Now, we saw this the last time he had his presidency. The dollar initially strengthened because investors were bullish on his pro-business stance, and then he wanted the dollar to weaken in order to make the US a more competitive trading partner. So right now, as US dollar stands, it's very strong, but it'll likely weaken, which is why I want you to consider these international investments, which I'm going to tell you about in just a moment. Now, the US dollar index is a way we can tell that the US dollar is strong, and it compares the US dollar to the euro, to the Japanese yen, the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. Now, this index was actually recalibrated in 1999 when the euro was introduced, so it's actually really out of date. Two economies, Mexico and China, their currencies aren't even included in this index, which shows that the US dollar index is out of date, even though it's very, very strong right now, meaning the US dollar per the US dollar index is very strong. Now, if we threw in other currencies that the US does trade with, like the Chinese yuan, it's likely that the index would actually be even stronger. And that's because the US dollar is actually at record highs compared to many of the largest international currencies, like the Indian rupee, like the Brazilian real, like the Chinese yuan, like pretty much every other currency. So just because the US dollar index is outdated doesn't mean that the US dollar is weak. It's probably actually stronger than we realize it. Now, again, that's not a good thing, and I think it's highly likely that the US government and US leadership will do everything it can to weaken the US dollar in the coming years. So, if you hold US dollars right now, you should be looking for investment opportunities because it's likely that the value of those US dollars you're holding are going to weaken. So you want to maintain your wealth by trading your US dollars for assets that are very cheap right now and will likely rise in value in time, which will result in you maintaining your wealth. So things that are very cheap right now in US dollar terms are foreign stocks. So if you think about any foreign stock market, like in Brazil, in Russia, in China, in the EU, in Australia, in Canada, most of those stocks are very, very inexpensive compared to US equities. To give you an example, the S&P 500 right now is at a PE of around 30, while the NASDAQ is around 40. You have many countries right now with a PE in a single digit, so a fraction of the value of the US markets. Now, that's not to say that US markets are bad. In fact, I think US markets are the best, and they'll probably continue to outperform many other markets. But the valuation of US markets is very high. It's much more likely that the valuation of a smaller, undervalued country will double compared to the US. The US value is very high, and it's very unlikely that it will double from here. Another thing that's interesting is foreign real estate. This is something I've done throughout my career. Invested in undervalued real estate in foreign countries and then sold for a profit years later. If you look at many countries right now, there are real estate sellers that want US dollars. So in price terms, for a US dollar holder, real estate is pretty cheap. So you can get good values in many countries around the world. And that will ensure you can preserve your wealth for the long term by taking your powerful US dollars, exchanging it for undervalued foreign real estate. Then you can collect a yield while you hold it, while you rent that real estate out, or you can sell it in the future for a profit. Another interesting area is commodities. Commodities are very, very inexpensive right now. So if you look at gold, which is hitting all-time highs in dollar terms, it's actually much higher in other currencies because it takes more of other currencies to purchase less gold. While the US dollar is the most powerful currency right now, it purchases more gold compared to other currencies. So in the future, it's highly likely it's going to take more US dollars to purchase less gold. So if you want to preserve your wealth, purchasing gold right now will probably pay off for the long run very well. The same applies to silver and many other food commodities or other metals. Also, Bitcoin is an interesting investment opportunity to preserve your wealth if you're a US dollar holder right now. Another opportunity is travel. This doesn't really have anything to do with investing, but if you are looking at a place to go that's inexpensive, somewhere like Japan is very interesting. Japan right now is the cheapest it's been in US dollar terms since the late 80s. So historically, if you have US dollars or you're a US citizen, when you travel to Japan, it's very, very expensive. But right now in early 2025, it's actually very inexpensive. Food, lodging, transportation, all of that is very inexpensive relative to where it has been for the long term. The last one that I think is interesting for entrepreneurs is imported goods. So if you're importing goods into the US, the US dollar is very strong, which means you can purchase a lot of goods from foreign markets. This will not last, meaning the strength of the US dollar enabling you to purchase large quantities of goods from foreign markets will not last long. So if you have US dollars and want to make money by putting those US dollars in, say, commodities or gold, or purchase goods that you can import from other countries that are very inexpensive right now, now is the time to do it. It's highly unlikely that you will tap the bell at the top, meaning time it perfectly when the US dollar is the most strong. So right now is the time to think about transitioning your very, very powerful and strong US dollars for assets and real estate and commodities and imports that are very, very cheap. All right, I know that was a lot and pretty confusing. Long story short, take your US dollars and purchase cheap stuff to maintain your wealth. Enjoy this view. See ya.